All right, let's talk about something real. We're diving into the tough truth about trading, a world that promises so much, but for most people, it just doesn't deliver. We're going to pull back the curtain on exactly why so many people fail, and more importantly, show you how you can be one of the few who actually make it.
So let's just start with a number that might be a little hard to swallow. The industry estimates are pretty clear. Over 80% of new traders lose money. In fact, most of them quit within a few months, long before they ever see any kind of consistent profit. And look, that's a tough statistic for sure, but facing it is the very first step to actually beating it.
So that begs the question, right? Why? Is trading just some big rigged game? And the answer is no, not at all. You see, success isn't about some secret formula or just getting lucky. The reasons most traders fail are actually super consistent. And the best part, they are totally, completely avoidable.
When you really boil it all down, almost every single trading failure can be traced back to one of these three things: your mindset, your plan, and your approach to risk. That's it. So let's break down each one piece by piece. First up, let's talk about mindset. Honestly, this is the invisible battlefield where most traders lose the war before they even place their first trade. Because your biggest enemy out there, it isn't the market, it's the person looking back at you in the mirror. The number one mental trap is having these totally unrealistic expectations. People jump in dreaming of turning like $500 into $1 million overnight. But trading isn't a lottery ticket. It's a real skilled profession. Think about it. You wouldn't expect a brand new carpenter to build a perfect house on their first day, right? Of course not. They have to learn the craft. So the fix is to treat trading the exact same way. Focus on learning the skill and the results will eventually come. And that leads right into the next mistake: trading like a gambler. This is when you're making decisions based on a gut feeling or hope or just chasing that adrenaline rush. A professional trader does the exact opposite. For them, it's all about executing a disciplined, boring, repeatable process for every single trade.
Okay, mistake number 2, and this is where so many beginners just completely fall apart: trading with no plan. You've heard the saying, failing to plan is planning to fail. Well, in trading, that's not just a saying, it's a guarantee.
So, what's it look like to trade without a plan? Well, it's chaos. It's jumping into trades randomly. It's holding on to a losing trade way too long, just hoping it'll turn around. Or maybe cutting a winner way too short because you're scared. The antidote to all that emotion and chaos is incredibly simple but powerful: a written trading plan. And look, a trading plan doesn't need to be some 100-page novel. It's just a simple document that defines your rules. What exactly has to happen for you to enter a trade? Where will you put your stop loss? Where are you going to take your profits? Answering these questions on paper before you're in a trade is what separates the pros from the crowd. Now, a really common side effect of having no plan is strategy hopping. You know what I mean. A trader tries a strategy, it has a couple of perfectly normal losses, and they immediately ditch it for the next shiny object. You just can't build consistency that way. The fix? Pick 1 or 2 simple setups and just commit to mastering them through practice and repetition. And that brings us to our third, and honestly the most critical mistake of all: terrible risk management. You can have the best mindset in the world and a perfect plan, but if you don't manage your risk correctly, you will fail, period. It's the single fastest way to blow up a trading account. I love this quote because it sums up the professional mindset perfectly. See, amateurs are obsessed with how much they can make. Professionals, on the other hand, are obsessed with how much they can lose. Their number one job isn't making money, it's protecting the money they already have so they can stay in the game long enough for their strategy to work.
So how do they do it? It's simple. They set a hard, non-negotiable limit on every single trade, usually 1 to 2% of their account. So if you have a $10,000 account, you are never, ever risking more than, say, $200 on any one idea. That discipline is what lets you survive a losing streak, which, by the way, is going to happen. And here it is, the cardinal sin of risk management: moving your stop loss because the trade is going against you. Your stop loss is your pre-planned "I was wrong" point. The second you move it out of hope, you've just turned a small, calculated risk into a potentially giant, uncontrolled loss. You have to set it, and you have to respect it. No exceptions.
Okay, so we've torn apart the 3 biggest mistakes. Now, let's build the solution. Because success in trading isn't about finding some magical indicator. It's about building the right habits, day in and day out. Here's a simple routine that you can start using literally today.
This 4-step routine is your new blueprint. First, you've got to write your strategy down. Why? To take the emotion out of your decisions when the market is moving. Second, you do a pre-market check every single morning. Look at the economic calendar, see what news is coming out, and identify the key price levels for the day. Third, you execute with discipline. That means you calculate your position size based on your risk rules, and you only take trades that check every single box in your plan. And finally, number 4, you keep a detailed journal. You log your trades, why you took them, and how you felt. This is how you actually learn from your mistakes instead of just repeating them over and over.
You know, when it comes down to it, the biggest takeaway is this. Becoming a successful trader isn't a single event. It's not one big win that changes everything. It's a process. It's a long-term journey of building skill, discipline, and most of all, mastering yourself. And this roadmap gives you a realistic idea of what that process looks like. Notice the first couple of months are just for learning the basics. Then you spend the next several months just mastering your strategy and risk on a demo account. You shouldn't even think about trading with real money until you've got at least 6 months of solid practice under your belt. This isn't about getting rich quick. It's about getting good, slow. So, that leaves us with one final, and I think the most important question you have to ask yourself. Are you here to build a serious business, or are you just buying a lottery ticket? Because your answer to that question is going to determine your entire future in these markets.